Welcome back to my more important analysis videos on Tuesday 19th of September with me, Japan market analyst at Hantec Markets. Looking at cable, and cable is still a bit of a volatile play, isn't it? It had that sharp run higher on the back of hawkish rhetoric from the Bank of England on Thursday, Friday last week. 370 pips it added across those days, and it certainly looks as though the market has just sort of petered off a little bit in the rally. You had comments yesterday from Mark Carney suggesting that rate hikes were going to be limited and gradual, and that has sort of taken a bit of the edge off this rally. A little bit of steam off the top, a little bit of a correction, just coming about 100 ticks, 100 pips lower, and it's sort of maintained that sort of consolidation, but it's back to 34.80, and I've sort of left that level on because if you zoom out, that was a key level of breakout. So you are effectively, well, bang on there now. So it is obviously a level that is important, and the market is looking out for it. You've got that uptrend channel that comes in 34.30. So I think as long as you're sort of holding on to these levels, I think the market is still fairly positive. It's not going to correct sharply lower, but a second bear candle today wouldn't be that great, and certainly if you started to sort of gain a little bit of traction, then the market might start to think about a retracement, possibly even back towards that sort of 32.60, 32.50 area, which again is 50% Fibonacci retracement of the big Brexit related sell-off. So yeah, this is a move that's interesting. I think we need to keep an eye on it. Obviously, if we see, as I said, if we see a second bear candle today, we could start to see a bit of traction. But you've got the support of that old uptrend. You've got this sort of support that then would start to come in at 32.50 area. So you could theoretically start to see a bit more of a correction if that were to be the case, if you started to see these sort of bear candles racking up. But for now, it's basically consolidating, just sort of 12 pips down on the day. Nothing too significant, but trading around that 34.80 breakout support. In terms of the hourly chart, still fairly positively configured, isn't it? Really, you wouldn't suggest that's anything more really than a little bit of an unwinding move in the last sort of day or so. So let's not get too worked up about this quite yet, but we still need to see some market sort of building support above this breakout. So that was what the bulls would be looking for. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.